I'm William Grantham with IchimokuWeather.com, and we're going to do a deep analysis of Bristol-Myers Squibb. First, we're going to take a look at the weekly and daily and define our support and resistance areas. Then we're going to take a look at the sector, the overall market, and then we're going to come back and look at the daily for stop placement and targets. We're currently looking at the weekly, and we can see that market action has come out above both the blue line and the red line. And right now, the blue line is crossing back above the red line, and so that's the beginning of a bullish channel here on the weekly. We have a fairly long, flat red line, which means that over the last 26 periods, we have not had a new higher high or lower low with which to be able to change the calculation for this line and to angle it up or down. The lagging green line is free and clear above old market action as well as the other lines, and our future cloud is green even though it is getting a little bit thin on the very future part of it. Our first support zone on the weekly, directly underneath market price, we do have the flat red line, and so that's going to give us support here at $62. And then directly under that, we have the flat portion of the cloud right here, and that's going to give us our next support zone at around $60.84. And then underneath that, we have the 200-period simple moving average and the bottom of the cloud, and that's going to give us a third support zone on the weekly at $57.14. For resistance, we're going to be looking back at January on 2020 as well as January here in 2021 and drawing a line across the top of market action. We can see that at about the 67 line, we have resistance right above. Here we are on a daily chart, and we can see that market action is above the cloud, having a Kumo breakout a few days ago. The blue line is above our red line, which means that we are in a bullish channel. We had a cross back here, and that started the bullish channel when the blue line crossed above the red line. We are above the 200-period simple moving average. The lagging green line is above old market action as well as the other elements of Ichimoku, and so that makes it free and clear, which gives us momentum to the upside. Our forecast shows that we do have a Kumo twist going from the red cloud into the green cloud, and the green cloud is getting thicker. We can see our lines brought in from the weekly for our support. On the weekly, the red line showed a support zone that's corresponding to here on the daily at the bottom part of this flat cloud right here. So running mid-cloud, we do have a support zone underneath us. Then the top of the cloud on the weekly corresponds to about the bottom of the cloud here on the daily and is our next support zone. And then the lower support zone on the weekly, which was at the bottom of the cloud, is down here at $57.14. Here on the daily, if we look back for support, we can see a flat blue line here. Our Tenkan-sen has a little flat line, and so that's going to give us support, and that's currently where we are at with our market action. So we'll draw that in here and see that it corresponds to about the top of the candle on the last trading day. So we might see a little bit of stall right here as the market action hits that resistance that's directly above it. Bristol-Myers Squibb is in the healthcare sector. We're going to use XLV as our chart for the healthcare sector, and we can see that this chart looks very similar with market action moving above the cloud as well as the blue line being above the red line with a bullish channel. The lagging green line is free and clear, and the future cloud has twisted into green and is getting thicker. This chart is showing a ratio between BMY and its sector using XLV. So when it is going up, that means that the first symbol, the BMY, would be doing good. And when it's going down, that means that the second symbol, XLV, is doing good. So we can see that the sector has been outperforming BMY for quite a while, although we do have a few places where BMY has popped up above the cloud for a little bit of a Kumo breakout, and that's what's currently going on right now. We have exited the cloud just a little bit, closed above it, and so we could be seeing the start of a Kumo breakout right here. On our ratio between BMY and this sector, we have lower highs as we're coming down, and our lows are getting higher. So we can draw in some trend lines here to give us an approximation of what we're looking for. If market action on BMY were to continue to outperform XLV, we will see on this chart market action being able to go above this trend line. However, if the sector outperforms BMY, we will see the market action on this chart fall below the trend line. These are our lines in the sand to be able to watch BMY to see how well it's doing versus its sector. Using VTI to look at our overall market, we can see very similar market action with a cross of the blue line above the red line creating a bullish channel. This time it's above the cloud system. And our market action has taken off from the top of the cloud and is riding the blue line up. Our lagging green line is free and clear, and our future cloud is green and getting thicker. This chart is showing the ratio between the sector and the overall market. So this is the healthcare versus the overall market. We can see the overall market has been outperforming the healthcare sector for a while. Right now, healthcare sector for the last week has been moving up, so that could be a positive sign. We will be looking to see if the healthcare sector can move above the red line here and then move into the cloud, and then of course being able to get up and above the cloud will show that the healthcare sector has turned around and is starting to outperform the overall market. Now we are back on Bristol-Myers Squibb on the daily chart, and we're looking at possibilities for stop placement if you were going to get in at this point. We're looking at Bristol-Myers Squibb on a daily chart. If your trading plan called for a 10% stop, then the yellow box would be where the stop would be at the bottom part at $58.90. So it does show that your stop placement, it would be below the two support lines as well as the cloud and the Tenkan-sen and the Kijun-sen, as well as the 200-period simple moving average. The pink box shows that if your trading plan called for a 20% drawdown possibility, it would put you in an even safer level all the way down here. On the weekly chart, we can see that as well, and it brings us into the middle part of the cloud and way below the cloud. If your trading plan is using a 1-to-3 risk-to-reward ratio where you have a 10% stop, then you'd be looking at a 30% target, which puts you up towards $85. And here's what that looks like on a daily chart with our 10% possibility of a drawdown and our 30% target. We can see that the 30% target might be a little bit of a stretch to get there based upon previous market action and how far this chart has moved. So if you do plan on taking this as a trade, you might want to take partial profit at 10%, 20%, and then taking the rest of the profit if it does make it up to the 30%. If you were to decide that the risk-to-reward ratio wasn't quite set up correctly with this extended run right here, you could wait for a pullback to the Tenkan-sen or a pullback to the Kijun-sen or the top of the cloud, and that would allow your 10% stop to be set even lower, and it would also reduce the height of your 30% target. I'm William Grantham with IchimokuWeather.com with this deep analysis of Bristol-Myers Squibb Company.